G'day folks, welcome back to another update for natural gas. The charts are showing a potential retrace. We'll look into some back testing as well, so don't forget to hit that like and subscribe button to support the channel. In terms of the outlook as of today, April 16, the natural gas ETFs, BOIL, seeks to achieve twice the daily performance of the Bloomberg Natural Gas Subindex. KOLD is the inverse of that. UNG, designed to track the daily change in spot price of natural gas through the near-month future contracts. In terms of AI data centers and geopolitical events, natural gas markets remain tight due to rising demand from AI-driven data centers and limited supply growth. Prices are projected to increase significantly by 2026, driven by undersupply concerns and increased usage in heating, industrial fuel, electricity and exports. Geopolitical tensions, particularly in Europe and Asia, continue to disrupt natural gas markets, with the EU considering measures to reduce dependence on Russian gas and China increasing imports from Russia. The United States Natural Gas Fund, UNG, is currently trading at $17.36, reflecting market volatility amid these global dynamics. So first looking at natural gas, the commodity price. On the monthly, the long-term trends first. On the monthly, you can see here the price is broken above the moving averages, and it's been bullish now since around about September 2024. But notice this month so far, we've got a nice big bearish candle, and it's causing, or the CCI is causing it to pull back towards that moving average range. So a bit of caution there in terms of going long. On the weekly, likewise, we've got that price has broken through those moving average range and it's finally broken below it, and so is the CCI. So fresh breakout to the downside on the weekly charts. So again, just be cautious of any long positions. And on the daily, it has already broken down previously since around middle of March on the CCI and also the price, and that's continuing in a downtrend. There's no divergence to identify there at the moment. And there's some trend lines just for reference, support resistance lines. It's actually approaching this minor support at 32.16, and it may well reach that in the coming days. But notice also it's been trending below this diagonal descending trend line since then. Now if we look at the intraday charts, we always look at the intraday for any micro moves. So again, taking predominantly short trades, we had a bullish divergence here in that first little peak there before our last video. That bounced, hit our 23-38% target range, and that's measured by the Fibonacci retrace. So that's at 23-38% range. And if we were to take that Fibonacci now to this new low, we've got another bullish divergence here, or almost a double bottom on the CCI versus lower lows on the price. And I've drawn a 23-38% target range there. So very likely we're going to possibly, if it starts bouncing from there, it's already broken above on the CCI. It could actually drop lower, so just be cautious. We don't trade these divergences. We look at a potential entry, an exit point if you're already going short. Probably take your profits off the table if it's if you're in a short position at the moment. So looking at the back test on the 1 hour time frame, we would have started the back test here for the stop loss approach and the average down approach. Back at this point on the 1st of April, that would have been back there. That's where these two back tests begin from. Now, again, the strategy, as you should know by now if you're regular to the channel, but we enter a short position here when the CCI breaks below the moving average range, a fresh breakout, and also the price does as well. Obviously, the reverse is true if the price breaks above the moving average on the CCI, and also the fresh breakout on the price, then we go long, but only if the daily is going long as well. So we only always go in the direction of the higher time frame. So here the back test for the stop loss approach. Since then, in those little periods up and down, and you'd still be in a trade today because that CCI is still falling, and so far the stop loss approach has generated 1,760, and so is the average down approach because we haven't dropped far enough to average down, so the same result for both the stop loss approach and the average down approach. So if you're trading BOIL, the long-term trends on the monthly, that's still bearish, and with a bearish candle so far this month. There's no CCI for it, but just by looking at the price chart, that's obviously a bearish momentum. On the weekly, it's actually broken up through that moving average range on the price in accordance with this bullish move on the CCI. So a fresh breakout there on the weekly, but notice as well, when we zoom in, it's actually broken below that moving average range. Even though the CCI is still bullish, I wouldn't be going long until we see this break above the moving average range. On the daily, that's also bearish with the CCI still hovering below that moving average range on the CCI, likewise the price chart. And as a result of this bearish divergence, we drew back here. The CCI highs were dropping versus high highs on the price after hitting that resistance up there at 107.11. and since then it's been dropping. Now, in terms of retrace, we go back to this Fibonacci level. You can see that it's already broken through that 23-38% level, and now it's broken past that 61%, which is a key area for Fibonacci retrace, and it's falling further. And again, it's still tracking in line with this diagonal descending trend line. Now, if we go to the intraday chart, the 1 hour chart, again, taking short trades only, but just be cautious. We did have a couple of, we had a bearish divergence back here before our last video. That broke down, hit our target range, hovered around in that range for a while, then it dropped further. Back in this little area, we had a very minor bullish divergence that also bounced, hit the 23-38% level, and we're currently sitting still on another bullish divergence at the moment, with the higher lows on the CCI versus lower lows on the price. And if we to draw a target, let's take it back to that significant high, you can see it's a 23-38% range I've drawn there. So again, I don't trade these. I look at them as a potential area to get out of short trades. In this case, if you're going short, probably best to take your money off the table and take your profits. Now that the price can still bounce, so I'll probably wait for further declines once it hits this target range. The KOLD on the long-term trend on the monthly, that's broken below the moving average range, so giving us a bearish momentum. There's no CCI drawn on the monthly. On the weekly, we did have a very long play of a bullish divergence back here beginning in 2022, and that's actually bounced and broken up into a bullish momentum since then. But notice more recently we've broken down through those moving averages of both the price and the CCI, giving us a bearish momentum on the weekly, but currently it's broken into that moving average range, giving us a neutral position. So avoid going long or short if you're trading on the daily in the direction of the weekly. So always pay attention to the higher time frame. On the daily, we had a bullish divergence here we drew since our last video, and we drew a target range, a 23-38% range. And again, if I was to draw a Fibonacci on that, just to show the reason for that target, is a 23-38% level, and that's still slowly rising towards that target range, with the CCI showing no sign of a pullback yet. Now, again, this could always fail, so there's never a 100% guarantee in these things, but more than 90% of the time it hits these 23-38% ranges. If we go to the intraday chart, again, taking long trades only if you're trading on the intraday in accordance with the daily trend, and that's where you would have taken these long trades on the 1 hour time frame. But notice at the moment it's broken down into that moving average range, and the price is still above its respective moving averages. And if you're trading that long, you would have entered when the price broke above on the CCI there, and also the price on the price chart, and you would have closed it out on that red candle in accordance with that CCI breaking into that moving average range. So UNG is moving as well, similar to the commodity price. The monthly has broken down below the moving average range of the price chart. The CCI is still bullish, but again is pulling back towards that moving average range, so be cautious. I wouldn't be going long or short if you're trading on the weekly. I'd wait for this to break either way and confirm on both the CCI and the price to be confident. On the weekly, we did have this long-term play off a bullish divergence. Higher highs on the CCI versus higher lows on the CCI versus lower lows on the price, and that actually bounced. And since then, more recently, the price has broken into that moving average range, and the CCI is broken below. So somewhat bearish to neutral positioning on the weekly. On the daily, hit this resistance up here at 24.13, broke through the moving average range, and the CCI and the price are still below the moving averages. And again, another result of this bearish divergence we drew after hitting that resistance, and it broke and hit our 23-38% level. And again, if I was to draw a Fibonacci of that range, it's actually approaching this 61%. Now again, when I draw these Fibonacci retraces, I like to take them to the low before that divergence started, and that's why that range was identified there. But again, it's already broken through that 61%. When that happens, I then extend that Fibonacci to sort of see where it's currently resting. You can see there it's currently resting at the 61%, and at that key low there on that support line, it's just short of that 61%. So we might see further lows in the near term. Now, if we go to the intraday chart, again, today take predominantly short trades on the 1 hour if you're trading on the 1 hour or any intraday time frame, and you'd be taking short trades in accordance when the CCI breaks fresh breakout below the moving average range, and likewise when the price does as well. You would have taken a short entry there and close it out when that CCI touches that moving average range. Now you could have closed it out there as well and then reopen it, and then finally you would have closed it out again there as well. So you would have made a couple of little trades there. Avoid going long. Again, you want to go long only when the daily CCI is broken above, and so is the price on the daily. If you're new to trading, we are now including a weekly video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you better insight into our analysis and help you follow our daily videos. If you enjoy the content and help keep me motivated to keep doing these videos, subscribe at least on a free basis to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me over a coffee. Thanks, and talk to you in our next video.